What's going on, everybody? This is Ken Marsh, and I'm going to go over my 9 EMA strategy. This is the first strategy I started with, and it is a very good, simple, easy strategy for everyone to use. So stay tuned, read the risk disclaimer. If you need to, pause it, and we'll see you soon. All right, guys, welcome back. As I just stated, we are going to go over the 9 EMA strategy that I like to use. It's like the first strategy that I first came up with, and it's very simple. It's pretty much just a top-down approach to looking at the market. And basically, it's very simple. It's just a 9 moving average with an 18 moving average. Both of them are exponential. And all I'm doing is I'm looking to make sure that all the 3 pairs that I use are all going in the same direction. They all have the moving averages crossed over and going in the direction that I need them to go. For example, here we're on the pound JPY on the 1 week, or on the weekly. And this is the 9 EMA, the white line, and the purple line is the 18 EMA. And as long as the 9 or the faster moving EMA is below and we're in a bearish condition, we're going to want to be selling only. Now, in the other case, we're going to be wanting to buy if the 9 EMA is above the 18 EMA. So that's what we're looking for. And one thing to kind of note, whenever you are starting to move up and you see the market come below these, you'll see that you'll get a nice tightening of those moving averages. And when you do, usually you'll get an explosive move once you do go back up it, even though right now this is in a range right here. But the reason why I'm looking at the pound JPY is because we finally made a break above all 3 of these equal highs on the weekly, and which was quite a few months ago, way back in the summertime. We broke it here in September, and we're in another range here, but we are starting to slope up, and we're stacked out a little bit. So we're starting to move to the upside. So I'm anticipating that we're going to finally break these highs coming here, probably not till in January sometime, but possibly you can get some nice trades going up because you still haven't made it up to the highs yet. So let me show you what had happened this week and what you could have been trading. So first off, like I said, on the weekly, we're going to be looking for the direction. Basically, we're just looking to see if we got a 9 EMA above or below the 18, and they're going in an upward direction, not sideways like this. Now, you got to look at the candles too, just to make sure you see that you are starting to move into an uptrend. Right in here, you're not. You're in a range. We finally broke up out of this range, and now we're in a smaller range, but we are starting to slope up even more. So you can take some trades here. You're just not going to be taking any longer-term trades. You're probably going to take short-term trades, but I'll show you what I mean. So we start on the weekly. Now we're going to go down to the daily, and we're going to make sure that matches up as well. And we are going up. We have the 9 above, and we are sloping up as well. And of course, here, this is your tight range here. But what was interesting was we had this really crazy consolidation period, and then we made a big move up, took these highs out, came up, and we tested this resistance area, and it failed. We came down and went up, tested again, failed. So I'm anticipating this to go back up here again and try to make another attempt up. So there was a couple of trades you'll see here in just a second that you could have taken. Now, I didn't trade much this week. I've had a lot of family over and been pretty busy. That's why I haven't even just barely got to this next video. But I wanted to get this out before this week because next week I probably will not be trading at all. Maybe Monday. Maybe. But I doubt it because we're not going to get much market movement. Oh, not Monday. It's Christmas on Monday. So no, not going to be trading. probably not going to trade at all. So nope. But so we got that confirmation. It's exactly what we're looking for on the weekly is what we're looking on the daily. So we got that. Now we're moving up. Now it's not a huge slope up, but that's okay. You're still moving up, not sideways. We did break some resistance, so we did come down here and get a little fake out below this low, but we moved up straight from there. Got a little pullback action going on tonight, but that's okay. I'm kind of hoping for some pullback so I can get another entry maybe and actually take a trade here on pound JPY. But let me go to the 1 hour now. So we're going to use the weekly, the daily, and the 1 hour is your entry time frame. So I already have it marked out here. You could have took 2 trades this week so far, and they would have both won yesterday during the U.S. session. So right at the U.S. session, actually. So let me break this down for you. This is really simple. Exact same thing. We need to make sure that on the 1 hour, we have an upward slope, and we are the 9 is above the 18, so we got that here. Now, these candles are kind of extended past the 9, so I would not be attempting to enter these yet. I would wait for a pullback. And then once you get a pullback, and then you get a break above the 9, and you get a solid move up from there on this candle here. Let me take this off just so I can show you real quick here. This candle right here is the one we're going to be looking for. We would be looking for an entry right there. So what we're going to do for an entry, once this candle closes, at the top of this candle is where we would put a buy stop, or you would buy at the break of this candle. If the candle doesn't get broken, you're not going to take the trade. You're going to wait and see if we can get another move. See what that next candle does. But once you get that, if you do get that break, you're entering the market, and your stop's going to be below below the swing low, which is this one here. So I'll put this back on here just so you can see it. So you're going to enter at the break of this candle, the wick there. Whoops. And this is where your stop will be below here. I wouldn't put it right at the candle. I would, just a little bit below it, to give yourself just a little bit of room, but not too low because we want to keep our risk reward. If you'll notice when I show you this stuff today, that a lot of the times the market's not going to come back down and take out this next low. If it does, it's okay. This strategy, what's great about it is you're going to get large reward for versus your reward's going to be much higher than your risk. So it's a really nice one. It's very simple for everybody because I've had a lot of people message me and ask me if there was a different strategy. The strategy I've been showing you on my YouTube channel has been a little bit more of an intermediate to advanced strategy because it involves a lot of market manipulation. So I wanted to give you guys something that was a little bit more simple that anybody can use. So that's what we're going to do. And your target, now I'm going to scrunch this up. This is your target right here. You could target here. Nothing wrong with that. And actually you would have just barely hit that target. You might have missed it because of your spread. But this could have been your first target. But if you aim for that target, you're going to get about 55 pips. You're going to get a 2-to-1 ratio. But if you're trading this, if you go to the daily, you're going to be targeting the daily swings, the swing highs. Like here's one right here. You're going to be targeting that. Now you'll see them on the 1 hour as long as you scrunch it up a little bit. You can bring it down. You can see what that is. If you want to be safe, you can target here. You can take off first profit here and aim for here if you want. With this strategy, I typically let the whole thing run, and I just move my stop loss to break even, and that's it. Once I get a really nice, not like this. Now, this move would not have wanted. I don't move my stop very easily. I'll let this one run until it's pretty high up there, about halfway to where I want to go. Then I'll move my stop loss. In this case, I wouldn't have moved it yet. It's not halfway. It would have been pretty close, but it wasn't there. But this would be your target right there. And if you can see, you would get a nice 5.5 to 1 reward to risk ratio. You had a 26 pip stop. You probably would have had a little bit more than that, maybe a 30 pip, just to be safe. So you'd have got about a 5 to 1 on this one. But you're targeting 148 pips right there, 148 pips. And it's a pretty simple trade. You're going to have to wait through all this, but it's okay because after about 2 days worth of waiting, boom, you're going to hit your target. Most of the time in these trades, you're going to hit your target in the same week that you're trading. These are going to be shorter term swing trades, which are great. It's kind of good in between. A lot of people can't stomach long periods of time, and some people don't have the time to day trade and scalp and things like that. So this gives you a definitive entry, stop loss, and target, and you let it run. You don't even have to move your stop loss if you don't want to. I like to, move my stop loss up. Once you get about halfway, just to lock it in, just in case it just drops down. It doesn't happen most of the time. You'll see that this is it's a very strong strategy. It works great. I hate to say that I actually moved away from this for a while, and I think it's because I wanted to perfect the other strategy. But I think I'm going to come back to this because it's a little bit more consistent. It's a little bit easier, and this month has been kind of slow for me. Not been great. I'm only up 3%, and for a December, that's great for me. But I want to be a little bit more consistent. So next year, I think I'm going to focus more on this strategy that I use because it's what I started with, what I developed, and I really like it. Tweaked it a little, and probably the best tweak was the entry, the way I enter. I let the market come back up and take out that candle before I enter. I don't just buy when I see it close. I like to see it pull back and break out. But let's go to the next trade, which you're going to have the same target because you haven't reached it yet. But you could have entered here. Say you missed all this, or you just decided to look at the markets on Tuesday. So right here, this is the beginning. What time is this? This is 8 o'clock in the morning. So this happened right at the beginning of the U.S. Open, or the New York Open, the U.S. Open. And you're going to wait for a break. Once you get the break, your stop loss is going to be below this low here, and you're targeting here. And you're going to get a 3 to 1 risk reward. You're going to have about a 40 pip stop, and you're going to be targeting about 119 pips or a little bit less. Because you want to account for your spread. You don't want your spread. You don't want the market to be. You don't want to target here, and then you have to wait for your spread before you reach your target, and then you miss your trade. So you can target here just a little bit below that to be safe. It doesn't matter. I really just prefer to. I like to target really close to this, usually a round number. So that's just something I like to do. This is around. I would probably target around 150, 190 here, just to make sure I get the fill. And in this case, you would have got filled in about a day, and you would hit your target right here. So get rid of that so you can see your target would have been hit easily. And you'll notice with this strategy, if you use it correctly, when you target these swing highs, you're going to see the market will go up to it pretty quickly, usually. And once it takes it out, it stalls out. It'll either go above it and stall out, or it'll stall out right at it and then pull back. And I was waiting for this pullback here. I'm actually might be entering this trade. So here actually pretty soon. I've been watching it. We're at the Asian Open, and I'm wanting to see. Right now, the 9 is trying to cross over to 18, so I'm wanting to see it go back above it. We're going to see, because we have a lot of news coming out here. We have, well, not really a lot of news, but we have some monetary policy statements, BOJ policy rate, which isn't that big a deal. But all this news right here, press conference, this is happening later on. and we don't know when these are going to happen. They're not really announced on a time, so we're really waiting to see what happens. For now, we're going to see it's probably just going to go sideways and flutter around. So we'll wait. We're going to wait for a trigger. No matter what happens, we're going to wait for a trigger. Now, if it breaks above, way above, probably not going to be entering this trade. So in this trade, we're going to be entering, and this is going to be a shorter term trade. Nothing major. I don't even know where we could target. Might just take a 2-to-1 or 3-to-1 trade. We could be targeting up here, but coming into next week with the holidays, probably not going to be a good idea to take a longer term trade. So we're just going to probably take a nice little short trade out of that, and maybe hold it till the morning and see what happens. But those are 2 examples on pound JPY. We could, like I said, we could target right here. That would be a good target, right up here. Let me mark it off right there, and then let's zoom back out. Yeah, that'd be a pretty good target. Maybe a 2.5-to-1, 3-to-1. Depends on what it does. Might not even get an entry. It might just continue down, so it might not get an entry till here. Then you could target here or here, or right here. I'm sorry now. Safely, I would like to see this pull back down a little bit more, and then when the news releases, get a nice little move, but not too strong of a move, and then I can get in and hold it up to here for a little short trade, or maybe up to here. We'll see. It's not that much further up, about 30 pips or so, 35 pips. So we'll see what happens with this trade. Next, another example. Let's go to Euro USD. And same thing. I'm not going to go back through the weekly and the daily time frames. Just keep in mind that if I'm showing you a trade where I already know that we're going up, we have a 9 EMA above on both those 2 time frames, and so we're here now. Let's look at Euro USD now. The big thing about Euro USD is we got a really nice upward movement going, and this is what you really want to see when you get these really nice steep moves here. You're going to get some pretty quick profit, but you got to be pretty careful, because usually these big moves, you're going to get big pullbacks, big strong pullbacks, especially in the Euro USD, because as I've said in my other videos, it's a very manipulated market. So it's interesting to watch if you really pay attention, you watch it every day. But in this case, let me zoom back out. As you can see over here, this will be your target right there. So here we get a nice big move up. Now, we didn't trade this yet. I wouldn't have traded this. This was on a Friday. This was on Monday, but I wouldn't have traded this just yet because we've been moving down. I want to see a break above here. Once we did that, we had a nice break up here. Here's your market manipulation coming up, taking stops out, and then dropping back down because there was a lot of selling pressure here. Or fake, whatever. It's a fake out, big fake out. Comes back down, pulls back. And then when it does, you get this consolidation area here. It happens, at the end of the day. And then on, which is really odd on Euro USD, the move started during Asian. Usually it doesn't typically do that, but it did it this time. It did it yesterday too, or on Monday too. Maybe because of the holidays, but it doesn't matter. The rules are the rules, and this wasn't the beginning of the Asian session right here. This was actually right at 8 o'clock on Central Time anyway. And we get the move up. The 9 and the 8 are, if you can't really see it, but it is above. It comes down. It never makes it below, so it stays up. We get the move up coming out of this range. So you would put your entry right above that candle, stop loss below the lowest candle of the swing, which is here, and then you would target that area I just showed you here, and you would have got a nice 5-to-1 trade there. You would have had about a 15, 18 pip stop, and you would have been targeting around 70 pips. So another really nice trade. So you'd have got about a 5-to-1 or a little less than that. And if you could see, it did go a little bit further than that, but as it did, it comes up, spikes, and then it died out. It's going to be very common when you see a big swing like that one taken out. Even this swing, when it was taken out, it died out, but it did continue higher to take out this one as well. So that was a really nice one on Euro USD. Let's see what else I got. I think there was one on Euro JPY. Yes. So again, really simple. Let's make this a little taller. There we go. There's your target right here. Nice big pin bar right there. Big move down. And we're, of course, bullish on this market because of the weekly and daily candles, or the weekly and daily. And we have a nice steep slope up here. Now, in this case, the reason why you could have entered here is because you didn't take out this high as it was coming down, but you did come above this consolidation area, pulled back, didn't break this low, and you started to move up. Nice tight, nice little tight moving averages there. And so we're waiting. And right here, we start to move above. And this is, of course, right around 9 o'clock at the beginning of the Asian session, first couple hours. So this move up here gives you an idea to enter the trade. Now, you could have entered here. It would have been really close because it didn't really come up here. So you could have entered here or you could have entered here. It doesn't really matter. It's about the same entry. I actually probably wouldn't have. Yeah, it's kind of one of those iffy ones. You don't know. You could have entered here as well. But this one right here was a nice big move up here. It came up to this candle high here. So it's one of those ones that could have entered, could have not. But it's just a good example for you to see. You do want to see it break above this, but in this case, it pulls back and then breaks above it here. That's not too bad. It's okay. But you get the break right here. You get the entry. Stop loss is below the swing low right here. And then you're targeting here. So you got a nice almost 3-to-1. You got a 40 pip stop. In this case, with a 40 pip stop, it's a pretty big stop. So you might be 40, 42. You'd be targeting about 118 or 115 pips. So you would have got a little less than 3-to-1 on this trade. So you see, you hold it for a little while, but once it gets going, it goes pretty quickly, comes up and takes this high out, and then, as you can see, and then consolidates again. Does go up a little bit higher, quite a bit higher, probably targeting another stop. Let me scrunch it up here. Looks like they came up, took this high out, consolidated, then took this one out and consolidated. So that should open your eyes right there really quickly. Why I love price action and why I use price action when I trade. Every time you take out a very major stop, consolidates, take out another one, consolidates, you get a big move up, takes this one out, and then consolidates. And now we're just waiting to see what the market's doing here. Could pull back and then move up higher, could pull all the way down. We don't know yet. So this is the one we're waiting just to see what happens. It's pretty extended. If we go to the daily time frame, you can see what this market looks like. It just took out this high and this high and this high. So it just took out this range, the whole top of the range, and it actually closed above it, as you can see here. So it's a pretty good sign that we might be moving higher, but we might get a pullback back in the range. So that's one of those things we're going to wait and see what happens on this trade. So that was Euro JPY, and whoops, didn't mean to do that. Let's see, Euro Chef or Euro Swiss. I always call it Euro Chef. Euro Swiss. We would have had a little bit of a tougher trade here, but it's an example anyway. You had a big explosive move out here, but it looks like a big move. But this is the Swiss. Any Swiss pair. It doesn't move a whole lot. You're not going to have a huge range. So this big crazy candle here is not really that big. It's only 27 pips. And you would have targeted. You could have targeted here. you wouldn't get a very good reward to risk ratio. But in this case, I would have targeted here because I want a higher risk to reward ratio, and really I see this as the top of that, the best swing, because it came up here, made the high, and then it moved lower, went below these lows here for liquidity, and then moved up pretty strongly. So I knew it's probably going to try to take out all these highs. But notice, takes this high out, goes sideways. Takes this high out, goes sideways. Takes this high out. Now it's pulling back, probably going to go sideways again. Maybe come down now. You're going to see this pattern a lot with this 9 EMA strategy. But again, this would have been more of just a 2-to-1 trade, which is fine. There's nothing wrong with that. I don't like to go for anything less than 2-to-1, especially on this one. And as you can see, they usually last over a day, but they usually move pretty quickly. I don't know if I have any more examples. Maybe pound CAD. No, that one was not. Why do I keep doing that? Let's see if there's one. Oh, yeah. We're going to stick with the JPY trade pairs here. USD JPY. This is another good trade. In this case here, same thing. We make a move up. Comes up to these highs, but doesn't break them, but that's okay. It pulls back and never breaks back below here and starts to move up. As long as we're seeing some bullishness, and usually on the other time frames, it's a pretty strong move. So right here, we get some consolidation, moves back and forth, and then we get this 9 back up above, and this is at 6 o'clock in the morning on the right before the New York session. And just a little bit of tidbit behind the scenes. Yes, 7 o'clock is the open, or 8 o'clock in New York. Here it's 7 o'clock for me. And an hour before the New York session opens, usually you're going to start getting some movement up or down just a little bit. But in this case, it moved up just enough to break all these highs here, previous highs here, and we had a nice move, and it was starting to curve up, so this would have been a good entry here, and it pulls back, breaks through, so it pulls back right when the New York session opens, then breaks back through, and then your entry, your stop loss is actually, I don't know why the stop loss is there, stop loss should be right here, and you would target, you could target, like I targeted this high here because you had this big strong move down here, but you could target this one here as well, and you see that it's coming up there right now. It's not there yet though, so let me draw that out right there. So could have been targeting up here. You could be holding this still, but I would have targeted here because this big strong move here. Good target here, totally fine. You would have got a 3.5 to 1, around between 3 and 3.5 to 1 if you had a 20 pip stop loss and you were shooting for 60 pips. And this one, about a day, a little over a day for this one to trigger or to close out. And I'm really anticipating this to go at least up to here, which is not much further from market. Here's the market here. And we'd be coming up to really close to here. So that's about 40 pips from where the market is right now. Yeah, I wanted to enter this trade. And I might actually enter this trade. I don't know yet. We'll see. It just broke this candle. I was waiting for this to happen, but it has not. I mean, it just did, and I just decided to do my videos. So we'll see what happens here. And it's pulling back a little bit. So it's kind of one of those things where I'm not quite sure what I'm going to do because we do have some news later. So I'm going to wait. It's probably just going to kind of still go sideways for a little bit. Don't see it exploding anytime soon. So it just depends on whenever that news releases. So that's really simple. It's not difficult whatsoever. I just showed you quite a few examples. So we'll do a little recap. You're going to start on the weekly. Now this is really jicky looking, but nonetheless, we are above on the weekly. We are above. We are sloping up on the USD JPY. Go to the daily. Same thing. And what I really liked about this one is it's starting to slope up on the daily. So we could be easily going over this and targeting probably right here over time. Let me draw that for me for future reference. So right there. So these are two possible target areas. Well, this one I'm pretty sure it's going to be taken out. Even if it takes it out and comes back down, it'll take it out. If it doesn't take it out, I'd be very surprised. But if you see, we make this big move up and we get about a 50% pullback. And now we're already moving higher. So if we do break this, we're probably going to go ahead and come all the way up here. To kind of give you an idea of what I'm talking about here, if we draw a fib out to this spot, we get a nice move here. We get a pullback to just past the 50% level, not even in the 62 or the 61.8 for you guys that have regular Fibonacci. And this area here is only just above, it's barely just above here. So we're probably going to go ahead and take this one out too and extend up into at least the 161.8 or maybe even all the way up to the 200% level, the symmetrical price swing. So we'll see what it does. But I'm very interested in this one. Let me go get rid of that. Let's go back to the 1 hour here. Or actually, I have multiple screens, so I'm going to put it on my other screen. Okay. So weekly, daily, we're moving up. Just now starting to make a move up on the daily. So again, we're going to go the 1 hour time frame. And this is where we're going to be entering our trades. And I did it again. Boom. There we go. So that's where we're going to enter our trades on the 1 hour time frame. And when we do enter the trade, we're going to look for the candle to be bullish. We're going to look for the 9 EMA to be above the 18 EMA, hopefully with a little bit of a slope upward. And we want this candle to be right around the beginning of one of the major sessions, especially the one that pertains to the actual pairs. So this is the USD JPY. So we want it to be happening during the Asian session. Could happen during the London session. Usually the London is the extension of the Asian session because it's coming, that's the end of the Asian session and comes into the Euro or the Frankfurt and London Open. And then you get extension through into, of course, the U.S. session, and then you get your pullback for all the profit taking because it's a pretty big move. So you get a pullback, consolidation after it breaks this high, and then you get your continuation up to your target. So it's a very normal thing you're going to see whenever you're trading. You're going to see a break above a high. You're going to see consolidation. You're going to see another move up to the next high, where you'll get a pullback into the support area, then get your move up. So depends on, and usually if that happens, that's great. You can get another entry into the trade if you want to add on to it, or you're just going to hold, and once it starts to move up, then you can move your stop just underneath that if you like. So there's a couple options there. So look at the weekly. 9 is over the 18 for a buy, under the 18 for a sell. We need a little bit of a slope. Same thing on the daily. Then we go to the hourly, and we're going to look for the same thing. We're going to look for the 9 to be over the 18. Preferably, you want to enter during around the beginning of one of the 3 major sessions, and especially ones that pertain to the pair that you're using or you're trading, and then you're going to look for a break above that candle that is above the 9. It needs to now the majority of the candle you would like to see it above the 9 and the 18. That'll give you a really good distinction that you're starting to get momentum. You're going to get the break, stop loss below the most recent low. You really kind of want it to be pretty tight of a range. Usually when this happens, it's going to be coming out of a range. So you really would like that, because then you can get a nice tight stop loss to entry, and then you're going to get a nice reward out of it. And don't be afraid to hold these trades. Don't be scared if it pulls back. That's what stop losses are for. With this strategy, you're going to win quite a bit as long as you're using it correctly and you're following the rules, and you are going to win bigger than your losses. So don't be afraid to take your losses. It happens. It's part of trading. If anybody tells you they don't trade, sorry, that's my wife, if you hear that. That's my wife, and it's also my fund manager asking me about USDJPY. So anyways, that's what we're looking at. It's going to be a very simple video. I'm sure there's going to be a lot of questions. So if you do have questions, please don't hesitate to leave comments and ask those questions. Let me know if you have any ideas. I like to have things open for discussion. I'm not one of those people that doesn't like people to comment or talk about strategies. If you don't even like the strategy, let me know why. Let me know what you think you would do with the strategy. Maybe you have improvements for it. Hey, that's fine. Leave them. Let me know. If you're in my group, and you have some questions with this, let me know. Again, in my group, that's fine. You don't have to leave a comment. But that's it. Like I said, leave a comment. Don't forget to subscribe if you haven't done that. Click the little bell next to subscribe if you want to get these videos. Every time I post them, you'll get a notification. That way you don't miss any. And what else is there? That's pretty much it. So, guys, just remember, the trading is not gambling. If you're in this to gamble, great. Have fun. Hopefully it's not your rent money. If it is, that's not good. But I'm not here to tell anybody what to do. But I really want to press risk management. I prefer not to go over 2%. If I'm losing, I will lower my lot size until I start winning again, until I break back up into where I was when I started losing. Then I will increase it back up to 1.5 to 2%. And I'll stay there as long as I'm continuing to win. And it just allows my equity curve to just continue moving up. Sometimes it'll move up slower. Sometimes it'll dip a little bit, but it always continues to move up. Since I get a nice move up, that's just the way my equity curve goes. And, that's what we want for everyone in my group, and as well as just everyone else here just watching my videos. So like, subscribe, comment, and I will see you next time.
I've been watching you.